Jim Walker, who predicted the 2008 market crash, said a big thing about India. This will help even in falling market. Hello friends, have you ever thought that even in the midst of the chaos in the market, a country can be such which becomes the safest and best option for investment? Have you ever thought that when markets are falling all over the world, companies are going bankrupt and investors are withdrawing their money, a country can still be a safe haven for investors? This is not just speculation, but it has been proven by the veteran investor who predicted the global market crash of 2008. We are talking about Jim Walker, the famous economist of Alethea Capital, who had already anticipated the financial crisis of 2008. Jim Walker recently made a big statement about India's stock market. He believes that even though the Indian market is going through a period of decline, India's position is much stronger than that of China and other countries. In his opinion, the current market correction is a natural cycle and it can be a golden opportunity for long term investors. Why is Jim Walker so positive about the Indian market? Is India's economic model better than other countries in the world? And should investors invest in this falling market or stay away from it? Today, we will discuss this topic in depth. But before that, if you are new to our channel, please don't forget to subscribe to the channel so that you will be the first to get our new video updates. So let's understand this whole matter in detail. The Indian stock market is currently going through a tough phase. Since the beginning of 2025, the market has continued to decline. So far, the market cap of companies listed in the Indian stock market has declined by about 40 lakh crore rupees. The Nifty 50 index, which was launched in 1996, is currently experiencing the longest decline in its history. There are many reasons behind this decline in the Indian market. Economic uncertainty at the global level, inflation, increase in interest rates, selling of foreign investors, and geopolitical tensions are the main reasons for this. The sale of foreign investors, FI, in the Indian market has put a lot of pressure on the market. The weak economic situation of America, Europe, and China has also affected the Indian market. But despite all this, why are veteran investors like Jim Walker and Nikhil Kamath optimistic about the Indian market? Nikhil Kamath, co-founder of 𝐼𝐸𝐻𝐻, India's largest online brokerage, believes that this decline was necessary for the Indian market. Kamath said that market decline is a natural process. The Indian market witnessed a tremendous boom after the COVID pandemic of 2020. Sensex and Nifty set new records several times in 2021 and 2022. This market boom was temporary and a correction was needed. Nikhil Kamath calls it a healthy correction. Kamath believes that this decline will bring balance to the market and valuations will come closer to the real situation. He has advised investors not to panic due to this fall and continue with their SIP, systematic investment plan. Kamath said that SIP is a strategy that gives benefits to investors, rupee cost averaging, in different cycles of the market. Kamath said that at present, many investors are closing their SIP, which can be a big mistake. Jim Walker's prediction about the Indian market is a relief for investors. Jim Walker has said that investors need not worry about the current decline. He said that this situation is completely different from the global financial crisis of 2008. When the market crashed in 2008, the global banking system was threatened. Many large banks and financial institutions went bankrupt. After the collapse of Lehman Brothers, the entire world economy went into a deep crisis. But this time, the situation is different. According to Jim Walker, the current decline is due to the global economic slowdown and rising interest rates. Its effect will be short term. From a long term vision, the Indian market is still in a strong position. Jim Walker says that India's current policies are in the strongest position in the last 3 decades. The government of India has implemented business friendly reforms, which has strengthened the balance sheet of Indian companies. In addition, government policies to promote small and medium enterprises have increased employment opportunities. According to Jim Walker, the structure of the Indian economy is more stable than that of China. In China, companies are under pressure due to government intervention and debt problems. At the same time, Indian companies have better balance sheet and cash flow. Jim Walker said that investors should focus on the Indian market instead of China at this time. He said that the Indian market is currently standing at a golden opportunity. Strong fundamentals of Indian companies, better corporate governance, and stable political system are working in favor of India. Jim Walker advises investors to take advantage of this decline and increase their holdings in the Indian market. Walker said the situation is different from 2008 as India now has a better position in the global market. Apart from this, Jim Walker also appreciated the policies of the Government of India. He said that the investment made by the Government of India in the field of infrastructure, digital economy, and startups will have an impact in the coming years. The growth of the Indian economy is increasing at a rate of 7 to 8%, which is the fastest at the global level. Walker said that India's young population and rapidly growing consumer demand will strengthen the Indian market. Walker's view of the Chinese market is slightly negative. He said that China's economy has been affected by government control, rising debt, and US sanctions. In contrast, India has a democratic system where policies are implemented with transparency. Walker said that India could become the fastest growing economy at the global level in the next decade. Also, Jim Walker and Nikhil Kamath's opinion confirms that the current downturn in the Indian market is an opportunity, not a crisis. At this time, long-term investors can make huge profits by investing in the Indian market. The fear of a falling market will end soon, and the Indian market will touch new heights once again. So the question is, do you see this falling market as an opportunity? Are you ready to adopt the strategy of Jim Walker and Nikhil Kamath? One thing is certain that the current state of the Indian market can usher in a new era in history. If you like our content and want to make our efforts even stronger, you can support us through the QR code given in the video or the UPI ID given in the description. Your every small contribution is valuable to us and will inspire us to make even better and informative videos. Your support is our strength. Also, if this video taught you something new or you felt that this information should reach others as well, then do not forget to like and share the video. If you have any questions or suggestions in mind, then do let us know in the comments. We look forward to answering your every question and listening to suggestions. And yes, if you want to stay updated with our every new video in the future, then subscribe to the channel and press the bell icon so that you get every new information first. GRT Business always strives to give you accurate and reliable information. Our news is obtained from various news agencies, public opinion, and public sources. We try our best to verify every report, but we are not responsible for any dispute or error. Our sole aim is to provide you with accurate and reliable information.